FM. It is Monday, which means we're doing this.
Mads for the drive home, building for life.
Joined by Jake and Nico from Dornford Building Group. How are you going, guys?
Yeah, doing great. Thanks, Mads.
That is good.
Living the dream.
Living the dream. I love to hear it. We are talking this week about construction loans, going through the bank for those loans. Nico, what is a construction loan to get us started?
It's pretty much what it sounds like, Mads, to be honest. It's a loan for construction. So it's probably slightly different from most loans that people get because it is specific to building. Mm-hmm. So if you're doing a home loan, for instance, you'd get all of the money up front when you're buying a home. But with a construction loan, there's progress payments.
Yep.
And essentially the lender or the bank that you're going through, they'll release funds at certain stages of the project.
Right.
And then it's generally interest only, so not principal and interest until you've got the whole loan done.
Yep.
And so then it goes in stages.
Okay. So it can make it a little bit more accessible to people generally. They don't have to have the money up front to do an extension or a build if they're going to go with a construction loan.
It's specific to construction, so the bank knows what's happening when, and so then they'll put that in the contract. It'll all get formalised, and the builder sends in his claims at specific stages, and then it gets released 1, 2, 3, 4.
We've touched on this briefly before, but with the construction loans and how they run, normally they will fund most of it, but the deposit is normally paid to the builder straight up, and that is normally done as the deposit in the contract itself. So let's say it's $100,000 for the house. The owner would normally pay the deposit of 5%, which is $5,000. And then from there, the bank would then start funding the rest of the project. Right. So it's like a normal loan, like Nico said, but obviously your loan gets bigger and bigger and bigger as the project goes further and further on down the track. So once your slab goes down, there's a payment that comes from the bank. The second payment would normally be around the framing stage, then it's up the lock-up stage, and by that time, you're sort of $50,000 of your loan's been taken up. Yep. And then it would go into your fixing stage and then practical completion. And then at practical completion, once final invoice has been submitted, the bank will actually send an evaluator out to the property for a new home. They'll send them out to make sure the house is actually built or for a large extension.
The money's being used
correct.
As it's been agreed on. Yeah,
correct. Yeah. For extensions, though, we haven't really had valuers go out and have a look at the extension. Normally, the banks are trusting that the house has actually been built or the extension's been built. And then, so after the final payment's been paid, your sort of loan gets reevaluated and it gets transferred out of a construction loan into a normal house loan. Okay,
and so the benefit of doing it that way, I mean, you have to anyway. You can't just take out a normal home loan for a construction loan anyway. But the benefit of that too would then be that does it work out a little bit more cost efficient? Because you said you're not paying as much on interest, is that right?
So generally the way that they work, because with a home loan, you're paying principal and interest. So essentially you're paying down your loan.
Yep.
But to help with people's cash flow, because they know generally if you're doing a construction loan that cash is generally tight, they do it as interest only. So you're only paying the interest on that specific portion of the loan rather than on the whole loan amount or starting to pay your loan off.
Right, so, okay.
But one of the tricky things that a tip that we want to give people is when you're getting towards that final stage and the builder wants his money and then also the bank wants to do all of their valuations, is just keep the communication up between all of the different parties, letting the builder know when the valuer is going to come out. So there's no surprises when the invoice is late by a few days because the valuer hasn't been or anything like that, just to make sure that everything goes smooth through the whole process.
There's that clear communication and there's a documentation of that too, like keeping a paper trail of email or whatever it is. So you've got that in writing. This is what's happening when. Yep. Yeah. Okay. What about just quickly avoiding those finance delays and things? What would your tips be around that?
Very, very good question, Maz. Very good question.
Probably making sure you have all your ducks in a row. Making sure that you're actually... We have a lot of clients who come to us with they do concept designs, then they go through the planning stage and they go to the work and drawing stage, and that could be anywhere from 6 to 8 months time frame. So we normally advise our clients, say, hey, as soon as we've done a concept proposal for you and we've given you an estimation, you can take both of those items to the bank and start getting your finance approval ready and going. A lot of clients do come to us knowing, hey, we can borrow $500, we can borrow $700, $1 million, whatever it might be. But then once we've done their first estimation, once we've done the first concept design, they can take both of those to the bank and say, hey, can we get pre-approval now from there? And then just making sure that you're keeping on top of your bank and or your broker to say, hey, where's my make sure
what's
that
going on?
making sure that you're providing them all the information that they need.
Yep.
And just talk to your builder. So if you need a fixed price contract for some reason, make sure your builder's comfortable doing that. Whatever stage you're in, I would be making sure that it's further down the track. But if you need a fixed price contract or whatever information, make sure you get it to the broker in time.
Be upfront, be clear, 100%. Have all of that sort of ready to go. Yeah, good tips and advice there, guys. Okay. And of course, being the builders as well, obviously you can only give out general advice in this sort of thing.
Yeah,
but
especially when it comes to anything to do with finances.
So, but you could probably point people in the right direction, though.
Yeah.
If someone's got a question, you could say, okay, go and chat to this person who's a bit more of an expert in this area. Correct. Yeah. What are we going to chat about next time?
What trades wish clients knew?
Okay, looking forward to that one. I think you guys are looking forward to that as well. Getting some things off your chest.
We'll see.
Jake and Nico from Dornford Building Group, thank you. We're going to chat next time. And if you can always text in as well, 0430 25 1079.